Okay, so this is just a market cap comparison. The biggest from a total dollar standpoint and number of issues, the largest risk is the bond market. It is the biggest market out there, and that runs the gamut from sovereign wealth bonds, treasuries, etc., all the way down to junk bonds. You have high yield junk bonds, and then you also have lower yield kind of blue chip bonds as well. In that whole mix, it's just a huge basket. Next, the market cap size would be the New York Stock Exchange. This is like the better companies typically list on the New York Stock Exchange. They've traditionally been the more stable companies, and the Nasdaq's always been a little bit more risky. But you can see now the crypto market is making the Nasdaq market cap just look tiny in comparison. And then the next chart, this is just a number of actual stocks, the number of actual cryptos on the market, and also the number of ETFs, the exchange traded funds. So let's talk a little bit about the function of crypto in general. A lot of people think of it as just as a currency. There's some talk about it being Web 3.0 and just a new way to kind of implement the internet. So even with both of those as factors, how many of those cryptos do we need to do both of those things? I mean, we have over 7,000 of them. Most of them are not going to be here in 10 years. Would you agree, Robert?
Most of them may not be here in 5 years.
Probably not. I'm being a little optimistic.
Hey everybody, this is Rob Kientz with 𝙂𝙊𝙇𝙀𝙍.com. It is Tuesday, December 14th, 2021. We have a good guest on the program for you as we head toward the end of the year. It's Lee Justo. You know him from Wall Street Silver. He has started his own channel, the Risk Channel on YouTube. We've been on there and we certainly enjoyed it. We're going to talk about the cryptocurrencies, and we're also going to talk about the state of macroeconomics and what you may expect in 2022. How are you doing today, Lee?
I'm doing great, Rob. Thank you very much for having me on the channel, and I appreciate you coming on my channel. It was a couple of weeks ago. Video's still up. It was a great interview, and I enjoy talking to you as always.
Yeah, it's a lot of fun. I love going on new channels, especially ones focused on risk. I love the name of your channel because I was in various risk management roles in corporate America for a long, long time. One of them was audit. One of them was cybersecurity. I also did high-level consulting for boards of directors of these multi-billion-dollar companies. So a lot of risk there. And I appreciate looking at things from a risk perspective, because at the end of the day, you don't know exactly what's going to happen, but what you can do is to talk in terms of risk and how to mitigate that risk.
Sure. I mean, you always do your best to be aware of what the potential risks are and how you mitigate it and manage them.
So you have some experience. Just talk a little bit about your background since we're introducing you to our channel. Talk a little bit about your experience dealing with insurance and your role there.
Well, I've been in sales most of my career. I did venture into trading in the late 1990s in the old tech bubble, which was interesting times. I was working down on Wall Street with 20-somethings, and they were just trading crazy leverage, day trading. I was working as a proprietary trader. So I really have had a love of markets since that time. After September 11th, I made a shift and I went into corporate risk management. I worked for one of the largest insurance brokers in the world at that time. And through that experience, I worked in the M&A space, helping like private equity firms and corporations when they were buying other companies, doing due diligence on their risk management portfolios.
So quick, before we get into cryptocurrencies, explain the role of risk management. We're dealing with these multi-million and multi-billion-dollar companies. How much due diligence do they do when they're taking on in a joint venture or in a merger or something like that? How much due diligence do they do from a risk perspective?
Well, from a financial risk perspective, they do a tremendous amount. They're looking at management teams. They do investigations into their backgrounds, just making sure that they're not crooks and they're on the level. They dig really deeply into the books. These are numbers guys. That's what they do, and they even also look at the insurance policies that they have. The workers' comp policies, everything. They really kind of look at every aspect of risk they can.
Yeah, it's interesting. Companies do this every day. They have hordes of different risk management teams and different facets of the organization that are constantly addressing risk, and all of the executives are making risk-based decisions all the time, right? Everything an executive does is what's the risk, what's the cost and the benefit for the risk that we're taking, and that's all these companies do. I feel like in our private lives, a lot of times we don't do that. People have been taught in school how to address risk. They're just taught do whatever somebody else tells you to do, not how do you address risk, how do you assess risk, what are the risks, how to evaluate risk. Do you think, Lee, that there are some lessons there to be learned for people and how to, to learn, what risks are, how to prepare for those risks and how to mitigate those risks?
Take it down to the most simplistic example. Just having like fire extinguishers and smoke detectors in your house on every floor, it's a lot less expensive than having a total loss on your home, having a big fire, and having to chase insurance down, or your portfolio, setting stop losses. I mean, so you don't get crushed. I mean, you go on to Wall Street Bets, and some of these guys just throw everything at the market, and sometimes they make it big, but it's rare, and most of them just get killed.
Yeah, that's a good point. And sometimes hedging market risk, macroeconomic, we'll get into that later about macroeconomic risk and how you hedge that by how you structure your portfolio as well, and how you sort of address that. You wanted to talk a little bit about the cryptocurrencies. So you're seeing something in that market. Share with us what you're looking at.
Sure. David Morgan and John Perez did such a great series on crypto and the risk and Tether and how they're linking it to Evergrand. And it's a huge systemic risk. I mean, when we talk about the marketplace, there are so many cryptos on the market. And I actually have a couple of charts. Okay, so this is just a market cap comparison. The biggest from a total dollar standpoint and number of issues, the largest risk is the bond market. It is the biggest market out there. And that runs the gamut from sovereign wealth bonds, treasuries, etc., all the way down to junk bonds. You have high yield junk bonds, and then you also have lower yield kind of blue chip bonds as well. In that whole mix, it's just a huge basket. Next, the market cap size would be the New York Stock Exchange. This is like the better companies typically list on the New York Stock Exchange. They've traditionally been the more stable companies, and the Nasdaq's always been a little bit more risky. But you can see now the crypto market is making the Nasdaq market cap just look tiny in comparison. And then the next chart, this is just a number of actual stocks, the number of actual cryptos on the market, and also the number of ETFs, the exchange traded funds. So let's talk a little bit about the function of crypto in general. A lot of people think of it as just as a currency. There's some talk about it being Web 3.0 and just a new way to kind of implement the internet. So even with both of those as factors, how many of those cryptos do we need to do both of those things? I mean, we have over 7,000 of them. Most of them are not going to be here in 10 years. Would you agree, Robert?
Most of them may not be here in 5 years.
Probably not. I'm being a little optimistic. So we have that. And then we have the ETF situation. So exchange traded funds, they're basically baskets of different stocks and other assets, and they're traded just like stocks. So if we have any kind of severe market correction or crash, how are people going to unwind these issues? It's these are big risks out there that I think most people don't think of on a day-to-day basis. They just see in the news that Joe Schmo here is making a ton of money in crypto, and now he's retired and on the beach, so everyone chases. I mean, I remember seeing in my Facebook people questioning, hey, does anyone know about Dogecoin? Is anyone getting it? I mean, and these are people who have just no experience investing at all, and they're just chasing dreams, basically.
So would you say that they don't have an understanding of risk? They're following momentum, right? Somebody, their neighbor, their friend, they see it on social media, hey, get into this. They're not thinking risk at that point, Lee. They're just saying, oh, I need to ride the wave, right? And maybe I can make some quick money here.
Yeah, everyone's looking for get rich quick, and no one really takes a long-term strategic view of the markets. Very few people do, and even fund managers. I mean, they really have to just chase their quarterly performance. So, and I was thinking about this morning with the private equity portfolios. I feel bad for them because they really have no control over the marketplace. Just right. As mutual fund managers, they don't have much control. They have certain criteria that they must follow. They have to make their percentages, and if they don't, they're going to get replaced, and they're just completely at the mercy of the market, which has been utterly insane.
Yeah, and with all the passive money going into the ETFs and things, what it does is it bids them up way past what they should be historically, like for price to earnings ratio. I've talked about that. I talked about this on the OTC markets when I did my speech there, and have said it on our program. You look at the price to earnings ratio, the CAPE, the cyclically adjusted PE over 10, boil that down, and you compare it to past times in history. The only time it was higher was the tech crash, but we're right next to where it was in the tech crash. We're higher than the Great Depression. We're higher than the mortgage crisis. We're higher than any other point in time dating back to 1871. So that general market is overvalued. That's risk. That's a lot of risk. And people are just piling into this stuff, without making any adjustments. And to bring it back to crypto, I think the same thing. People are piling into crypto without knowing, are these cryptos legitimate? They've only been around 10, 12 years, started with Bitcoin, and then you have all, the others. You have the forks like Bitcoin SV, and then you have, the altcoins, and some people say the shit coins, whatever you want to call them. Nobody knows the true value of this thing. We haven't figured out, much like at the very beginning of the internet, we haven't figured out the value of the crypto and the blockchain. So we don't know what the value proposition is. So people are just taking on loads of risk without having a good risk mitigation plan or any sort of plan for, how to deal with this. And when you talk about Tether, I remember David Morgan coming on a roundtable we had maybe a few weeks ago, and he mentioned that relationship with Evergrand. And so I went to people have seen on my program, 𝙎𝙊𝙇𝙑𝙀𝙍, who's the smartest guy in crypto I know. And he said, yeah, remember, Robin, they did that audit a couple of years ago. It wasn't really an audit. It's a pseudo audit, fake audit. But he said they admitted, the legal firm that looked at them admitted that they had investments in other things other than dollars. So if Tether is holding Evergrand and Evergrand has defaulted officially, which Fitch says they has and has downgraded them, what does that mean for Tether? And then what does that mean for all the stable coins? Are these things really going to be looked at as having value if you see Tether implode because it invested in Evergrand?
I was listening to David Morgan's interview, being interviewed by Mike Adams, and Mike came out with such a great analogy for actually how these issues, and for that matter, stocks are priced. And he said, you could be a crypto millionaire. All you do is you make a spreadsheet. I forgot the exact numbers you use, but I'll just use $1. You put $1 a share, a million shares, and then you sell your first share for $1, and you're validating that price, and you're an instant millionaire. And that's
there you go.
Yeah, that's basically how the markets work.
And the problem with Tether is you look at the charts of Tether, just the way it trades, it's not. Anyway, I'm not going to get complicated into it. It's not what people think it is, and you can see it just by looking at the chart. And a lot of these cryptos, man, people get into them, and it's like, I'm not all for the government regulating everything. I'm for the free markets. But in the free markets, when you have a free market, you have to understand what you're getting into. You have to do your own research. And my fear is that people aren't doing the research in cryptos, and they're going to get burned.
Let's talk a little bit about this regulation and government intervention into the marketplace. From my standpoint, if we didn't have the Federal Reserve, if we had an honest monetary system, we wouldn't even have this discussion about risk, because basically the Fed creates all these dollars. They have to go somewhere. They're always going to chase the highest yield, and that will always lead to speculation and huge risk taking from the general public. So it doesn't matter whether it's crypto or stocks, and we're experiencing it now in pretty much any kind of asset category: real estate values, crypto, even student loans and education have been impacted with Sallie Mae and et cetera. So as I see it, less government would solve most of these problems.
I agree with you. It would force people to really look at things with a critical eye, and not just put their money into something, their hard-earned money into something. I think now, like you said, the Fed is causing people to chase return, to outpace inflation. So talking about inflation, today, this morning, producer price index came out, highest all-time print ever, 9.6%. We're going to have higher consumer prices going forward. I predict next year we'll hit at least double-digit inflation, if not higher. And the Fed's coming out tomorrow. So let's preview what the Fed's going to say tomorrow. We're nearly double-digit producer price indexes. They have to see that we're going to hit double-digit consumer prices next year It's not transitory, obviously. You know, what are the Fed's options? What could they announce tomorrow? Do you see them as having any real options?
You know, it's interesting. I just spoke with 𝙎𝙊𝙇𝙀𝙍 on my program.
Mm-hmm.
And he thinks that it's pretty much priced in the market right now. Everyone is so convinced that the Fed is going to tighten that they don't need to. And then I also spoke with Michael Pinto a couple days ago, and he's of the opinion that the Fed will do the exact wrong thing at the exact right time, where they're going to hit the bubble because they're going to tighten credit when they don't, you know, everything's already slowing down. So
Yeah.
it's pretty much anyone's guess, but all we know, it's whatever the situation is now, it's going to be worse in a couple months.
Yeah, they're both really smart guys. I've interviewed both of them. Pinto, of course, follows the bond markets very, very closely. Lobo is such a great market analyst. I've been on panels with him and had him on the program. And yeah, that's an interesting point. Nobody really knows where it's going. We do know back, you know, was it 2018 or 2019 when the Fed had been raising rates for a while, we had that 20% stock market correction. So in recent years, when they've tried to tighten, got it up to like just over 2%, the stock market crashed and everybody panicked, right? And it crashed during the holiday season, which is supposed to be one of the most robust times a year from a spending perspective. And, you know,
we're supposed to have the Santa rally too, you know, that's typically traditionally what happens seasonality wise.
Yeah. And, you know, I don't think the Fed can tighten. I think they're going to try. I think Powell's dead set on it. I think academically he wants to tighten. I think Powell understands that we're in a really bad spot, but I think he's coming at the tail end of all this evolution of the Fed, in which I don't think he's going to be able to solve the problem. I don't think anybody could solve the problem. I don't think they have solutions. So what does that look like for 2022? Paint us a picture. I don't want you to make any concrete predictions, but paint us a picture of what people can expect in 2022, like from a risk perspective. Are we higher risk? If so, you know, what types of risks are you seeing?
Well, I think we're at probably the highest point of risk in history from an economic standpoint. We have we have I always talk about this. We have the World Economic Forum talking about the Great Reset. To me, that's basically the world central banks telling everyone that they know the game is up, and the time of fiat is at the tail end. So I think we're going to see some interesting times ahead in the currency markets, which will translate into some crazy times in the equity markets, the bond markets. Actually, Michael Pinto coined the phrase the great reconciliation of asset prices, and I believe probably his time frame is probably going to be accurate. I think he sees most of the things starting to unwind significantly in first quarter next year. So I mean, please don't hold me to this. I'm just total speculation. But
yeah, no. I mean, that's interesting. I have a similar outlook to that. And what are you doing? I mean, you cover risk. You've been in risk management for a long time, like me. What are you doing in your portfolio? What's Lee doing? You're looking at this inflation. You're looking at the end of the dollar system. We know we're going to have some sort of financial reset, whether it's central bank digital currencies, like they've said, or whatever we end up with. How are you addressing this as a risk practitioner?
As a former person involved in Wall Street silver, I'm still buying bullion.
There you go.
That's the number one thing I'm doing. I really am. I believe that's really the only safe asset to own right now. I don't trust cryptos. I don't care who runs them, what their story is. I know that I'll probably get a lot of hate mail for that. I've tried to be open-minded to cryptos. I mean, I did watch Michael Saylor's big corporate presentation months back. I've looked into them. There's certain aspects of the technology which I think are great, but actually, going back to Michael Pinto again, he said that now crypto is looking for Wall Street's blessing, and that's going to erase their major benefit, because that's going to expose them to all, the Fed looking at who owns what and everything else. So there's not going to be any secrecy anymore.
It's interesting you say that. For people that support us on Patreon, on our latest weekly, I put up a video and I was talking about all the regulations coming in crypto. And it's interesting you say that crypto is looking for their blessing, because the reason they're doing that is because the government has said, we're going to regulate the hell out of you. So Gensler at the SEC has said, we're going to treat you like a bank, where you're doing banking activity, where you're having assets, and where you're on and off ramping. You're a bank. And the banking regulator, FinCEN's getting involved, the Treasury's getting involved. They actually said, Lee, and I don't know where this makes sense. They there are some aspects of crypto they don't have existing regulation for because it's a new type of system. They said they're going to give it over to Rostin Benham at the CFTC. They're going to say, we're just going to let Rostin handle a lot of this. And he's the same guy who admitted at the 𝙂𝙊𝙇𝙍 conference of purposefully limiting silver at $30, tamping it down in his words, using quote unquote, all of his policy tools, including margin and including, you know, all of that stuff. So the CFTC, the active manipulator of the silver market, is going to be regulating crypto. If you're into crypto and you think that they're going to treat them fairly, I've got a bridge to sell you in any county in the United States you want. They're going to regulate the hell out of crypto. And the big selling point of crypto and why so many people have flocked to it, they wanted a modern day version of gold and silver that protected them from the fiat system. And now you have the highest levels of this fiat system now taking over regulation of the crypto market, taking control. My question is, what happens? How does the crypto market respond to this? And why are they seeking their blessing? I thought they were supposed to be the guys that were going to break, you know, the stranglehold on money that the Fed had.
Let's be realistic about this. Do you believe that government regulators are going to allow competition for their fiat system and the new Fed coin that everyone's been talking about?
Not a chance in hell, because you look at what China did and they just flat out banned it and said you're going to jail. First it was you're going to jail if you traded it. Now if you hold it, you're going to jail. So there you go. That's the second largest economy in the world has spoken. No Bitcoin. Thank you very much. No, and the United States, what's that?
I was going to say they've done the same. Remember when they confiscated gold? I mean, they just do not want competition for their monetary system.
They don't. What they want is to move into the central bank digital currencies. We know that from the IMF paper. I've talked about it ad nauseum. Still on the internet. Anybody can read it. They want to get rid of cash. They want negative interest rates on your bank account so that they can say, well, instead of you depositing $100, you get 90 or 80 or 50 with the quote, no lower bound. So if they want to take all of your money, they can, and legalize this in the system. That's the system they want so that they can control money flow. If they control money flow, Lee, I mean, don't they control everything?
Now, just imagine if the communists had that kind of control over the spending in their countries. I mean, it's pretty much a central planner's ultimate dream.
Yeah, and how great have the central planners been for, I don't know, say controlling inflation?
Yeah, it's
yeah.
I always laugh when people say that we have a capitalist system. I mean, we do not have a capitalist system when the government is in control of credit. It can't be. It's the most centrally planned economy on earth, really.
So I think we both agree, to answer my earlier question, it's risk on for 2022. and we don't put specific dates out there. We look at milestones. I look at milestones where we are compared to other civilizations in the past, milestones to where we've been over the last couple of 100 years in the US. I look at economic data, look at cultural stuff that happens culturally. There's been a lot of good research on that. Kondratiev did some good research. Sir John Globe did good research. Other people have done good research. At the end of the day, all signs point to a lot of risk. So what do you think, you know, our next steps, Lee? What are you focusing on there on the risk channel, given all of this stuff that's come out the last couple of years?
Preparing for Kondratiev winter.
That's right.
I mean, the channel, I'm trying to get as many great guests as I can on the channel. Mm-hmm. And I want them to be as open about things as possible. I don't care what their view is. I really am interested in hearing all aspects. Even if someone's a super bull on crypto, I'd love to have them come on. I love talking about to people how they individually manage risks, and everyone has their own kind of approach to it. You know, I asked Lobo that, and he has a completely different approach. It's pretty much all based on fundamentals. You know, and I'm using risk management from kind of a technical standpoint. So.
Yeah, we try to do both here. If you want some crypto context, I met a couple of market disruptors in Miami. I'll send their your way, Lee, and I want to have them on the program too. We haven't announced it yet, but we're going to expand content gold, silver, precious. We're going to go beyond the precious metals and the economy. We'll announce that later. But we'd like to be in partnership with you on that as well. We want to have you back on the channel, Lee. Before we go, any last thoughts? Anything that you're seeing out there that you want to share with the audience?
I think everyone has to take a good, long, hard look at their situation and prepare for what's coming, and know that it could be much worse than expected, or it could be nothing at all, and at least you're prepared for it.
Yeah, take it for someone who's been in risk position, also been a trader on the markets. You obviously, have your perspective and view and know how to look at them, critically. And we thank you. We're glad to have you on. Thank you for coming on a short notice. I mean, we just sent out an invite yesterday. You jumped on. We appreciate you doing that very much.
Rob, anytime. I love talking to you. You're one of the smartest guys out there, and I do appreciate you for that.
Well, I really do appreciate that. It's a huge compliment. I think there are tons of brilliant people out there, and I appreciate, when people say things like that. Hopefully it's true, and hopefully people.
I mean it. I mean it. I really do.
Yeah, no, I appreciate that, and hopefully, people do get a lot out of it. What we do on the channel is try to bring people the best information. We're really there to help people at the end of the day. You and I think, have this in common, Lee, where we see what's coming. There's a freight train coming down the tracks, I like to say, and we're trying to get as many people prepared for that as humanly possible. Because at the end of the day, it's not just about, our wealth or our own well-being. If we're living in a society where people are suffering, that's not a fun place to be for any of us. So we're going to continue to do that on the channel. We'll have you back on the channel, Lee. Thank you so much for joining us.
All right. Thank you, Robert.
Thank you guys so much for watching today's video. We appreciate it. Please remember to like, subscribe, and share, and hit that notification button so you get those notifications when new content comes out. If you like what we're doing here, please consider supporting us on Patreon. Those members of Patreon will get extra special content delivered to them as well.